Warren, how would you define true success?
Well, I've said many times that if you get to be 65 or 70 and later, and the people that you want to have love you actually do love you, you're a success. I've never seen anybody that reaches that age. I mean, I'm not talking about somebody that's in extreme poverty or pain or something, but I've never seen anybody that, if they have a lot of people that love them, that is other than happy. And I've seen some very, very wealthy people that they give testimonial dinners to and name schools after and everything. Nobody loves them. Yeah.
What if your next investment could change the world and grow your wealth? While the financial world races for short-term gains, a silent revolution is unfolding, where profits meet purpose. From green finance to impact investing, the future of money is being rewritten. But are you in or already falling behind? The clock is ticking, and those who ignore sustainable finance today risk being left out of tomorrow's biggest opportunities. This isn't just investing, this is your legacy. Discover how smart money is saving the planet and how you can be part of it before it's too late. What is sustainability? Sustainability simply means meeting our current needs without compromising the ability of future generations to meet theirs. It's about balance between growth and conservation, profit and planet. In the world of finance and investment, sustainability isn't just a trend, it's a responsibility. It asks a powerful question: how can we grow economies without destroying the environment that supports them? At its core, sustainability connects three pillars: environmental, social, and economic. Environmental sustainability focuses on preserving natural resources and reducing pollution. Social sustainability ensures fair labor, human rights, and equity. Economic sustainability promotes long-term growth that doesn't deplete resources or exploit communities. Together, these form the foundation of sustainable development and sustainable finance. Today, investors are waking up to the reality that climate change, deforestation, and social inequality are not just moral issues, they are financial risks. Extreme weather can damage assets. Public backlash against unethical companies can ruin reputations overnight. That's why sustainable investing is gaining momentum. It rewards companies that plan for the long term, treat people fairly, and care for the planet. Understanding sustainability means realizing that we are all stakeholders in the future. Whether you're an individual investor or a global institution, the choices you make today shape the world we'll live in tomorrow. Green finance is the engine driving the shift toward a cleaner, more sustainable future. But what exactly does it mean? In simple terms, green finance refers to financial activities that support environmental sustainability. This includes investments in renewable energy, clean transportation, climate-smart agriculture, energy-efficient buildings, and more. The goal is to align financial returns with positive environmental impact. Unlike traditional finance, which often focuses solely on profit, green finance adds another layer: planet protection. It helps direct money away from polluting industries and toward projects that reduce carbon emissions, conserve biodiversity, and promote clean energy. This approach isn't just good for the environment, it's becoming a smart business strategy. Governments, banks, and investors are embracing green bonds, green loans, and sustainability-linked financial products. These tools raise capital for eco-friendly projects while offering returns to investors. For example, a green bond might fund a large-scale solar power project, while a green loan could help a company improve its energy efficiency. Green finance is also about transparency. Investors increasingly demand to know where their money is going and what impact it's having. That's why environmental, social, and governance (ESG) metrics are now part of major investment decisions. In the end, green finance isn't just about saving the earth. It's about securing financial futures in a world that's rapidly changing. It's the bridge between capital and climate action. Impact investing goes one step further than traditional or even green investing. It's about making money and making a difference. At its core, impact investing means putting your money into businesses, projects, or funds that generate measurable social and environmental benefits alongside a financial return. It's not charity. It's not just ethics. It's a smart strategy to support change while growing your wealth. Imagine investing in a company that builds affordable solar panels for rural villages, or a fund that supports female entrepreneurs in underserved communities. These investments do more than grow profits, they improve lives, protect ecosystems, and support sustainable development. And the best part, they are trackable. Real impact investors use metrics to measure outcomes, like tons of carbon reduced, jobs created, or children educated. Impact investing spans multiple sectors: clean energy, healthcare, sustainable agriculture, education, and financial inclusion. It appeals to individuals, institutions, and even pension funds that want to align their portfolios with their values. What sets it apart is intentionality. The goal isn't just to avoid harm, it's to actively do good. Impact investing is growing fast because today's investors want more than numbers on a screen. They want their money to speak for them, reflect their beliefs, and leave a legacy. In a world where every dollar can influence change, impact investing gives power back to the investor, turning profit into purpose. Risks and rewards. Like any financial strategy, sustainable investing comes with its own set of risks and rewards. But unlike traditional investments that only focus on profit, sustainable finance weighs both returns and long-term impact. Understanding these dynamics helps investors make smarter, more informed decisions. Let's talk risks first. One major challenge is greenwashing, when companies exaggerate or fake their sustainability efforts to attract investors. This can mislead people and direct funds into businesses that don't truly align with environmental or social goals. Another risk is the lack of standardized reporting. Since there's no single global rulebook for sustainability metrics, comparing investments can be tricky. Additionally, green projects, like renewable energy startups, can sometimes carry higher short-term costs or slower returns compared to traditional investments. Political or regulatory changes may also affect green incentives or climate policies, impacting profitability. But on the flip side, the rewards can be powerful. Sustainable companies are often more resilient in the long run. They tend to manage risks better, attract loyal customers, and adapt quickly to changing markets. Plus, as the world moves towards stricter climate regulations and conscious consumerism, green investments are positioned for long-term growth. In many ways, sustainable investing isn't just safer, it's smarter. It aligns with future trends, anticipates regulatory shifts, and supports innovation in areas like clean energy, biotech, and smart infrastructure. For those willing to look beyond quick gains, the rewards of sustainable finance are both financial and ethical. Future outlook: the future of sustainable finance looks brighter and more powerful than ever. As climate change accelerates and global awareness deepens, investors, governments, and corporations are being pushed to take responsibility. Sustainable finance is no longer a niche, it's becoming the new normal. In the coming years, we'll see massive growth in green bonds, ESG funds, and impact-driven portfolios. Countries are already setting stricter climate targets, and investors are responding. Renewable energy, electric vehicles, sustainable agriculture, and climate tech startups are expected to dominate investment portfolios. These sectors not only promise solid returns, but they also solve real-world problems. Technology will also play a key role. Artificial intelligence, blockchain, and big data are being used to track environmental impact, reduce greenwashing, and increase investment transparency. Investors will have better tools to assess where their money is going and what it's actually achieving. Meanwhile, younger generations, like millennials and Gen Z, are demanding ethical finance. They want to invest in companies that stand for something, not just those that turn a profit. As they inherit trillions in wealth over the next few decades, their values will reshape the global economy. If you're ready to invest in a better future, don't forget to hit that subscribe button now. What's stopping you from aligning your money with your values? Let us know in the comments below. And don't miss our next video, Cryptocurrency Explained: What You Need to Know Before Investing, coming soon!